Hi guys, how are you doing? How are you? Let's continue, shall we? So, lecture number 24. Today we will do an interesting concept called clubbing. Sir, clubbing we have already studied in CA Inter. I will say clubbing you have what? Deemed to have studied in CA Inter. Deemed only. Correct? So, real deal we will do today. This predominantly comes in MCQs nowadays in CA final. So whatever examples we'll be doing in class will all be MCQs. Okay, I mean it will be in the form of what do you say. Whatever examples I give, I've taken from MCQs, which based out of students' memory who have told that these things had come. Questions also will come, but then predominantly MCQs they are asking. It can be like 2 marks, 3 marks, 4 marks, or it can be a 2-mark question, whatever it is, important. So the notes is in F, and also the questions are also there. Questions you can solve, but predominantly the MCQ questions we will do here. In the sense, the examples itself will be MCQ. So clubbing of income. So what generally it means is earlier, what do you say? People were earning money, of course, even now they're earning. But what they did was, in order to ensure that they no longer pay tax, they used to divert their income to various other people. Those other people could be relatives, other people could be friends, etc. So that income tax department figured out. So they inserted section 60 to 65 to prevent this concept of clubbing of income. So the diversion, income diversion, correct, used to happen directly, what? Without overriding the title. Without overriding the title means what? Overriding means going against. Title means ownership. Now I am the owner of the asset, but then income is coming to you. Basically, it may be in your name, but ultimately I am the beneficial owner. So you would have heard of the name. Though it is not my name, it is held in somebody else's name. That is called Benami transactions. Benami prohibition law, which is there in paper 6D, which is part of our curriculum in paper 6D. People were doing it left, right, and center, but then, of course, the Benami Prohibition Act also was sort of, what do you say, reignited, I should say. It was already a dead law. It was a 1988 law. It got reignited by insertion of many sections in the year 2016. What happened in 2016? मेरे प्यारे देशवासियों, मित्रों, correct? Immediately after that, 2016-17, many amendments came, and there was a complete overhaul of the Benami law. Similarly, clubbing of income was anyway there. It was inserted quite some time back to ensure that people do not transfer their income. Now, this is what? Without overriding the title means, that's what? So, you have the ownership of the asset, but you will transfer it to somebody else. You will transfer it to somebody. So, that is, your diversion without overriding the title. But there are certain cases where the court only will tell you, I had told you this before, court will tell that, hey, your grandfather has left you property. I'll be like, yes, but your grandfather has left you property with one condition. You have to transfer 50,000 rupees per month rent. Now, whatever rent you get from here, this property will fetch you easily 2-3 lakhs. If you're giving it on rent, 50,000 rupees should be transferred to, let's say, orphanage. Only if you transfer to the orphanage 50,000 rupees, then what do you say? You will be getting this property. Otherwise, no. You may use it on your own, or you may do whatever you want, but main condition is what? You need to transfer 50,000 rupees to this orphanage. Now, the person who got it, like I got the asset from my grandfather, I will say, who the hell is my grandfather? He has given me the gift, I can do whatever I want. But no, since the will is drafted this way, this is called as diversion of income. What is the diversion of income? 50,000. This is by overriding the title. So this will come in the will, and this is called a probate of will. So in the will only it will come. So that is called what? Diversion by overriding title. One is diversion without overriding title, one is diversion by overriding title. So in this particular chapter, we will be discussing clubbing of income. What is the levy and collection, which we'll see later. How will I levy it? How will I collect it? What if the person doesn't pay? What to do? Then where there is no transfer of asset. One is I can transfer my house to you. I can transfer my, let's say, investments to you. That is one part of the story. Second one is what? I can only transfer my income to you. So whatever income I get, I'll transfer to you. Or I'll ensure that you will get the income, I will hold the asset. Correct? So basically, again, Benami. Asset is actually owned by me, but it is held by you, and the income you are taking. So will it be still be clubbed in my name is what we need to check. Then of course, what if there is transfer of assets? Transfer of assets, there can be two types. One is I will transfer the asset with an agreement to take it back later. I can cancel the transfer later, take back the transfer later. That is called revocable transfers. So obviously there are one more thing called irrevocable transfer, where I actually gift the property to you and I say I will not want the property back at all. That is called irrevocable. So is irrevocable transfer also, this is transfer of asset, not income. I'm transferring the asset. What happens to the income that you derive from that? We need to see. Then this is general stuff. It can be transferred to anybody. Then what about if I transfer for your spouse? For a husband, wife is a spouse. For the wife, husband is a spouse. If I transfer to spouse, what will happen? Second, one important question that can come is what about homosexuality? Now, homosexuality, has there been a law passed protecting the rights of the homosexuals, or is it the fact that the illegal or the criminality has been removed? Only criminality has been removed. There has been no law as such which is protecting the rights and giving equal rights to homosexual couples as well. So, I mean, it's a valid question, guys. You need to ask all these things because you will be a consultant. Tomorrow, if a homosexual couple will come to you and say, let's say a gay couple will come to you and say, sir, what is the taxability? Sir, he includes she includes he, but he includes he and all, we don't know. Like that, we should not speak, right? So think, when I say spouse, is it just the opposite sex or is it the same sex as well? Same sex couples, what to do? We'll have to see. We'll have to wait and watch for the, what do you say, amendments and for the, of course, new legislation, which will also include all these things. It will make it more inclusive for the LGBTQ community. For son's wife, yes, son's wife is also covered. Daughter-in-law is also covered, whereas son-in-law, etc., not covered because again, it is our unfortunate, patriarchal society whereby they say son's wife. You are able to control the son's wife. Unfortunately, that's since time immemorial, guys. Unfortunate, but it's there. So that was also club. Then of course your minor child. Minor child 64 1A. These are all the things that we need to see. So check that. With a view to reduce the tax burden, persons have huge taxable income may shift a portion of their income to persons who do not have taxable income. Hence, the income derived by such other person may be clubbed with the transferor's income and be taxed so as to protect the interest of the revenue. And similarly, we have the Benami law as well to cover the same. So as far as transfer is concerned, this transfer is covered under what? Section number 63 defines what is a transfer. We will see. And the transfer can be two types. One is what? Transfer of income without transfer of assets, or could be what? Transfer of asset. Could be transfer of asset. So transfer of asset also could be to spouse, could be due to son's wife, or it could be what? Other cases. Right? Other cases. So if it is, any assets which are transferred to spouse, and of course, guys, transfer here. Let's see section 63 just to understand. Whatever section I want, that only will not come. Everything else will come. Yes. Gives the transfer a right to shall be deemed to be revocable, and then transfer includes any settlement, trust, covenant, agreement, or arrangement. See, settlement can be a marriage settlement. Now, if the marriage settlement happens, will this clubbing come? We'll see. Trust. I will create a trust, a group of people, and I will transfer the assets there. That will look after some beneficiaries. Beneficiaries can be children, spouse. Covenant. Covenant is a restriction or a benefit. For example, that's what no, the grandfather will transfer the asset to me. Is it a benefit or a restriction? Benefit. But what is the restriction? Restriction is I need to transfer 50,000 rupees to somebody else. Covenant. Yes. Agreement or arrangement. Arrangement is something which has an oral agreement. Agreement here generally means written, but arrangement is what? It is an understanding. Need not be in writing. That is called arrangement. Just for your knowledge, these are all based on decided case laws. So obviously, rather than me going to each and every case law, I'm trying to tell you in the limited time that we have, 160, 170 hours, good enough for you to understand what all questions may come in the examination. Then, of course, revocable, we will see that revocable concept. Revocable means what? It contains any provision for retransfer of the asset back to you. Revocable. Or in any way gives the transfer right to reassume power directly or indirectly. So I can take back the power. That is called revocable transfer. That is the definition of transfer and revocable transfer. It is given here. So as far as spouse is concerned, it is 6414. Son's wife. Again, 1 second. For a spouse also. Adequate consideration. Inadequate consideration. Son's wife also. Adequate, inadequate. So for adequate consideration, clubbing will not apply. If I give it on for the particular amount, whatever it is market value, why will it apply? It will not apply, obviously. Inadequate consideration, if I am selling a house, other than house. For son's wife again, if for inadequate consideration, transferring a house other than house. Other than house. One is house, one more is what, guys? Other than the house. One is house, other than house. Sorry. Kulcha sim sim. So guys, if it is house, no, for inadequate consideration, there is a concept called deem owner under section 27. If it's other than house, we have section 6414. But for son's wife, section 27 will not come. 6416. Why? An individual who transfer otherwise than for adequate consideration means what? For inadequate consideration, any house property to his or her spouse. If you see the, what do you say? son's wife is not covered here under section 27. We'll come to that later. So this is the overall structure. You should understand the overall structure, right? Other cases. In other cases, I need to see whether it is revocable transfer. Again defined in, the revocable transfer is covered in section 61. Definition of revocable given in section 63. Irrevocable. Section 62. Exception to section 61. Income, transfer of income without transfer of assets. This is given under section number 60. So this, my dear buddies, is the entire scheme of things with respect to transfer. Similarly, now clubbing is also covered for minor children. Minor children is covered under 64(1)(a). We'll see that in a while. 64(1)(a) is for minor children. Are you with me? Yes, this is the entire scheme of things. The full structure should be in your mind. So when you say, okay, spouse, if it's inadequate consideration, for house it is section 27 deemed owner concept, whereas other than house this will come. All that logic we will see in a while. Now let's come to section one by one. Section 60. Divide and rule policy. Section 60. Come on. Chapter 5. Income of other person including in assets of total assets assessee's total income. Transfer of income where there is no transfer of assets. All income arising to any person by virtue of a transfer. We understood what is transfer. Whether revocable or irrevocable, I don't care. Whether affected before or after commencement, whether there is no transfer of assets, but where only income is transferred, will chargeable to the income tax as the income of the transferor and shall be included in his total income. So you see here, Mr. A is carrying on business, declares that the profit derived from such business shall belong to his brother. He will declare. Mr. B without transferring the entire business. So Mr. A says the whatever profits now, whatever it goes to my son. For example, I have a property. I will say the rent should go to my son. Actually, it happened. We were living in one of the rented premises when I was doing BCom, I remember. So that person, he was a ex-banker, retired guy, and he gave it to his son. Basically, it said, now the land, the owner, I am only the owner, but the rent is now to be given to son because son was not doing too well. Unfortunately, son passed away also recently. He was like, he's not old, but then of course he had some heart attack or something and he passed away. Nice guy. Sad. So if you see, yes, so the landlord has transferred his money, his source to the son. So that will be clubbed with the landlord or landlord's son only. It will be clubbed with the landlord. So will be clubbed in the income of Mr. A. What about this? MS Subbulakshmi, do you know? Correct. Singer. In lieu of amazing singer. Morning in our South Indian homes. Your Suprabhatam will come. That is by the great MS Subbulakshmi. Suprabhatam. Yes. In view of the remuneration for acting in a movie, the producer granted the right to exploit the movie for a limited period in a defined territory. It was held that this was a transfer of asset and not income. Thus, clubbing under section 60 will not apply. So, instead of remuneration, they gave like a share of profit or exploitation. So, in this particular case, it was not clubbing at all, is what this particular court held way back. Clubbing of income in case of revocable transfer of asset. Revocable transfer. When there is a revocable transfer of any asset by a person to another person, any income arising from such asset shall be included in the total income of the transferor and taxed accordingly. Revocable transfer means an asset where the right to take back the asset is there. Example, you see, Mr. X transfers an asset to his friend. Why spouse not covered? For spouse, there is a specific section. For spouse, we have a specific section. So the specific section will override the general section, right? Right. So that is what section 60 says. 61 we are seeing. Mr. X transfers an asset to a friend, Mr. Y, with the condition that Mr. Y needs to return the asset after 10 years. In this case, transfer is called revocable. Though the income from the asset is received by Mr. Y, it is always taxed in the hands of Mr. X by virtue of section 61. But the exception is what, guys? Reverse. Exception is this. When the transfer is not revocable, means what? I will give the asset to you in an irrevocable transfer, which it cannot be cancelled. What is irrevocable transfer? Just let's check 61. All the income arising to any person by virtue of a revocable, 62. We'll see 62. Provisions of section 61 shall not apply, means what? Exception to section 61 is section 62. 61 is revocable, 62 is irrevocable. To any income arising to any person by virtue of transfer by way of trust, which is not revocable during the lifetime of the beneficiary. And in any case of any transfer, which is not revocable during the lifetime of the transferee. Before you leave that. Transferor derives no direct or indirect benefit from such income in either case. So, if onion creates a trust, correct? He has an irrevocable transfer, means what? He will transfer the entire, what do you say, house property or whatever it is. So if you see one more, I'll explain both with an example. All income arising to any person by virtue of any such transfer shall be chargeable as income tax of the transferor as and when the power to revoke the transfer arises, and shall then be included in his total income, and shall then be included in his total income. He will transfer his house property to a trust, and this will be irrevocable transfer. So in this trust, the beneficiaries will be all girls whose names are Nandini. Don't ask the logic and all. It's just a stupid example just to make you understand. Everyone whose name Nandini, from 20 girls will be there. He's looking after the education. Anyan has become very nice now. That is the trust. The house property, etc., has been transferred irrevocably. Correct? So obviously in this particular case, will the income be clubbed at the hands of Onion? No. Because it very clearly says there, by way of trust, which is not revocable during the lifetime of the beneficiary. As and when those 20 girls, till they are alive, nothing will be taxed in Onion's hand. The transferor derives no direct or indirect benefit from such an income. Benefit here should be looked at what? Financial benefit. Sir, Onion is getting satisfaction of helping Nandini's. No. Right? Similarly, Onion transfers his house property in the name of his friend. Irrevocable transfer. Friend's name is Ambi. Transfers to his friend Ambi. Irrevocable transfer. And transfer is what? During the lifetime of Ambi. During the lifetime of Ambi. Let's say he transferred it on 1/1/2012. Correct? Let's say Ambi dies on 10th April 2022. And Onion takes back the house on 31st December 2022. Some 7-8 months later, he will take it back. Now, all the income that was deriving from 1st January 2012 to the date of death, 10th April 2022, will be taxed at the hands of Ambi only, obviously. That is what section 62 says. It's an exception to revocable transfer, section 61. But after he dies, the income will be taxed in Onion's hands only because he's taking it back. Question asked in the MCQ. See, all MCQ questions I am merging. Question asked in the MCQ is, will it be taxed from 10th April 22 or 31st December 22? 10th April 22 or 31st December 22. From which date? Income of from where will it be taxed? If you say 31st December 22, what will be, where will the income go? Whether it's tax free or taxable from April to December, what will happen? So if you see, check it out. It shall be chargeable to income tax as the income of the transferor as and when the power to revoke the transfer arises. Power to revoke, power to withdraw, power to take back the transfer, it will arise from which day? Arise from the date of death, obviously. The day Ambi dies, that is the day you have the power to revoke the transfer. The day Ambi dies, that is the day you have the power to take back the transfer. The power to take back the transfer. That is why 10th April 2022. 10th April 2022. I hope you are getting the point. Got it? That's what it is. So same here. Transfer is not revocable. Yeah, the transfer must not derive any indirect benefit from such thing. Exception is there. Income arising to spouse, son's wife, minor and HF to be clubbed under section 64. Income of spouse is covered under 64(1). So check it out. In computing the total income, so 64(1) will check. This is done. This is done. We have understood this one also. Easy chapter, but hidden points are there in MCQ. That's why I am doing it very much in depth. In computing the total income, this is 64(1)(2) of the individual, there shall be included all income which arises directly or indirectly to the spouse of such individual by way of salary, commission, fees, or any other form of remuneration, whether in cash or kind, from a concern in which such individual has substantial interest. Provided that nothing in this clause shall apply to any income arising to the spouse where the spouse possesses technical or professional qualifications and the income is solely attributable to the application of his or her technical, professional knowledge or experience. And what do you mean by substantial interest? Substantial interest means in case where the concern is a company, shares carrying not less than 20% of the voting power, and in case of any other case, such person or one or more of his relatives are entitled in the aggregate at any time how much? 20% of the profits of the concern. 20% of the profits of the concern. And again, one or more of his relatives. And we have seen relatives means what, guys? Linear ascendant and descendant. So we'll take an example. Substantial interest. So I am reading this one now. Point number A. Okay, come to F2, point number A. Where the remuneration is solely attributable to the application of technical or professional qualification, knowledge and experience of the spouse. Such remuneration cannot be clubbed. So the person is giving one, wife controls, let's say 40% of an entity, and the entity is giving money to the husband, 1 lakh rupees per month. Husband is 4th standard fail. What do you think? Depending on the technical professional qualification is 4 lakh rupees, 5 lakh rupees per month for a 4th standard fail. Is it valid or invalid? Invalid. So will it be clubbed in the wife's hands? Yes. On the other hand, if that person 4th standard fail happened to be Vijay Salagaonkar, Shyam, correct, then deadly, then obviously is brilliant. So yes, if you have the knowledge, qualification, etc., of course you can pay money to that person, doesn't matter. So it depends on that. Now if both husband and wife both have substantial interests in the organization and both are in receipt of remuneration, before that let's just see here, substantial interest means this. Check example. Mr. Shah Rukh Khan and relative Relative means what? Spouse, Gauri Khan, brother, sister, lineal ascendant, descendant. Has substantial interest in a company means what? What is substantial interest? Come here. In a company, more than 20% equity shares is held by whom? Shah Rukh Khan and the relatives. Then, if it's a firm or LLP, 20% of share in partnership. Employees. So, this is a case where Shah Rukh Khan employs whom? First, employs Mrs. Gauri Khan, wife of Mr. Shah Rukh Khan, an interior designer for a salary of 5 lakhs. Salary of 5 lakhs. She's anyway an interior designer and this is a company which is interior designing. Does she have adequate qualification? Yes. So if you see the arrow mark, salary income of 5 lakhs is not clubbed in the hands of Mr. Shah Rukh Khan. On the other hand, if Mrs. Gauri Khan, assume, was not qualified, then this 5 lakhs would be clubbed in the hands of Mr. Shah Rukh Khan. Now the question will arise, Shah Rukh Khan or his wife also substantial interest. So if both have substantial interest, what to do? That is point number 2. If both husband and wife have substantial interest in a concern and both are in receipt of remuneration from the concern and both do not possess any skill, both are chapper fellows, then such income will be included in the hands of that individual whose total income, excluding the income to be clubbed, is greater. So Shah Rukh Khan is earning, let's say, 10 lakhs and this income is 2 lakhs and Gauri Khan is earning 5 lakhs and this income is 5 lakhs. Correct? Now in this case, both are what? Or this is, let's say, 6 lakhs from the interior designing company. Both do not possess any skill and both are in receipt of remuneration. Both have substantial interest. Then I should, if you think about it, here it is 12 or let's make it 9 or 8. Here it is 10, here it is 11. So should I club it in the hands of Gauri Khan? No, check it out. Both husband and wife are substantial interest and both are in receipt of remuneration and both husband and wife do not possess any skill. Such income will be clubbed in the hands of that individual whose total income, excluding the income to be clubbed, is greater. So Shah Rukh Khan's total income is 80 lakh, Gauri Khan is 5 lakh. Ignore 2 and 6. This 6 lakh will be clubbed in whose hands? Shah Rukh Khan's hands. So Shah Rukh Khan's income will be 8 plus 2 plus 5. Sorry, plus 6 is 6 only, no? 8 plus 2 plus 6. 8 plus 2 plus 6. And once it is clubbed in Shah Rukh Khan's hands, can it be shifted to Gauri Khan is the question. So once income is clubbed in the hands of either spouse, it shall continue to be clubbed in the hands of the same individual in any succeeding year unless the assessing officer is satisfied after giving to that spouse an opportunity to be heard that it's necessary to do so. So if you see, if the AO feels that no, I should now shift the clubbing burden, etc., he can do so. But principles of natural justice have to be followed. Reasonable opportunity of being heard, PONJ, has to be followed. Husband means what? We have seen already. Second, where an asset is transferred to the spouse by the individual otherwise than for adequate consideration or in connection with an agreement to live apart, the income arising from such asset also will be 6414. 6414. So guys, this is what? Where asset is transferred to the spouse by an individual as a C. Otherwise than for adequate consideration. Otherwise than for adequate consideration. So if you see, for 6414, 2 things are not covered. One, agreement to live apart. And second, asset is transferred to the spouse by the individual SSC. Asset is transferred to the spouse by individual SSC, all other cases. So if you see, you see that wordings of the section subject to the provisions of 27(1). The spouse of such individual from assets transferred directly or indirectly to the spouse by such individual otherwise than for adequate consideration or in connection with an agreement to live apart. So if you see here in the chart, adequate consideration means clubbing will not come. And one more thing, spouse here. Agreement to live apart. Clubbing will not come. So husband or let's say wife gives husband a house as part of the agreement to live apart. Wife is earning really well. Husband is BCom husband. house husband. Correct? We'll tell housewife stupidly. No, he's house husband. So he will get one house because he's house husband. So what is that? That clubbing and all will not come because it's an agreement to live apart, divorce proceedings. On the other hand, if there is adequate consideration, no problem. The husband has paid money, market value that too, properly paid through banking channels, no tension whatsoever, then what's the issue? So there is no beyond arm's length price and all that. It is within arm's length price, absolutely no problem. But it's inadequate. Now, if it is a house, 6414 will not come. That's what they are trying to tell. Because it says subject to section 27. Section 27 is deemed owner. So if, for example, husband has property PQRS, right? So RS he will show in his books, PQ, correct? R and S he will claim as what do you say? Self-occupied. Wife will claim PQ as self-occupied. Husband is claiming RS as self-occupied. Wife is claiming PQ as self-occupied. Problem. So what happens for a husband's annual value will be nil. Wife also annual value will be nil. So even under clubbing, if I use 6414 and club the wife's income in husband's hands, husband income in wife hands, whatever it is, annual value will be nil because I am using it as residential property, self-occupied. Hence, this was happening, guys. That is why they inserted one clause called what? Subject to section 27. Because if you go to 27, what does it say? For the purposes of 22-26, an individual who transfers otherwise than for adequate consideration any house property to his or her spouse, not being a transfer in connection with an agreement to live apart, as discussed. If it's an agreement to live apart, no problem. But if it is not agreement to live apart, or to a minor child not being a married daughter, shall be deemed to be the owner of the house property so transferred. So guys, in this case, husband will be the owner of all PQRS. So for RS, it is self-occupied property. For PQ, it is deemed let out property. And of the four, they have to calculate whichever is higher, he has to pay. As per law, deemed let out. Why deemed let out property? Because you are a deemed owner under section 27. Because people were clubbing nil income in each other's hand, section 27 was inserted, and in 6414 this amendment was made. So that is why this is the logic. When house is transferred, section 27 will apply, 6414 will not apply. When other items are transferred like gold, whatever, then 6414 will come into the picture. Got it? Let me change the battery. Yes. Now you know. Good. Okay. Notes to B above, which is B, this only, guys. Come down. Everything in a structured format I've given, nothing to worry. Concept of deemed owner, explained in section 27, I already did now. The marital relationship between husband and wife should exist both at the time of transfer of the asset and the time of accrual of income in order to attract clubbing provisions. So basically, if what they're trying to tell is, if I give my house to my fiance and later the rental income she is taking, will the clubbing provisions apply? No. Similarly, son's wife is also there. No. If the father-in-law or mother-in-law gives the asset to prospective daughter-in-law, will clubbing provisions apply? No. check. Miss Alia received a gift of 10 lakh from her boyfriend, Mr. Ranbir. After they both got married, Mr. Ranbir gifted Mrs. Alia another 5 lakh. In this case, the first 10 lakh will be taxed in the hands of Miss Alia only, as there was no marital relationship. Before marriage, no marital relationship. After marriage, along with marital, change the wordings, martial relationship also. Karate. Right? Yes. Shh, don't tell anybody. Yeah. Then what? No marital relationship between Miss Alia and Mr. Ranbir. However, 5 lakh will be taxed in the hands of Mr. Ranbir, as Miss Alia and Mr. Ranbir were married, and this was transfer of asset without consideration to spouse. Sir, Alia will earn more than Ranbir. Don't connect it to the film actors. Just an example, guys. Income on the asset transferred is clubbed, but not income on the accretion to the asset. Accretion means addition. So I will gift gold to you. You will keep gold and then get some, let's say I will transfer some 10 lakhs to you. With that 10 lakhs, you will go buy debentures. Correct? Income on the asset is clubbed. Or let's take a simple example. That other part I'll come later. I'll transfer my house to you. You will get rental income. That rental income you will go and deposit in the bank. Bank will give you FD interest. Will that also be clubbed? No. Income on income is not clubbed. Mr. Mota, an individual transferred a flat to his wife, Mrs. Moti, okay, who derived rental income from the flat. Such rental income will be clubbed in Mr. Mota's hands. However, Mrs. Moti invested such rental income in fixed deposit and derived interest income from such fixed deposits. Such interest income cannot be clubbed in the hands of Mr. Mota. Hence, income on the asset is transferred is clubbed, but not the income on the accretion. So, Mrs. Moti, if she is waiting in the bank, it is called motivating. PJ. Sorry. Correct, no? Yes or no? Moti, waiting in the bank, motivating. Where an asset transferred by spouse is converted to another form, income derived from such converted asset also shall be clubbed. This I can give you an example. I gave you money. Money I didn't put in the bank. I bought some debentures from that. And from debentures I started earning interest. Yes. Allowed. It will be clubbed. Mr. Vyas gives a sum of 50 lakh to Mrs. Vyas on the occasion of wedding anniversary. Mrs. Vyas invests some in a fixed deposit, which derives interest income of 25,000 per month. The income so derived shall be clubbed in the hands of, despite the fact that it is the income of what? Converted asset. Converted asset allowed. Income of income not allowed. I have made a animation video, just like you saw for movie producers, etc. That movie thing. Here also I have made. I have not made for minor and all, that's easy. I have made it for these things. It will help you. I'll play it after that. Don't worry. Yeah. If any individual transfers any asset to any person without or for inadequate consideration for the benefit of deferred benefit of spouse, then income shall be taxable in the hands of the transferor. What is this? What is this? So this is 64:1 and 8 for son and son's wife both. Here any person should be read as wife, spouse, son's wife. So make that change addition here. So what used to happen was, husband used to create a trust and transfer money into the trust, and trust was paying the money to whom? To the wife or the son's wife. Let's say after investing that money for 15 years. 15 years later, it would go to the, wife. Now, issue went to court because assessing officer clubbed this income. He said, I am not giving to the spouse or, somebody else. I am giving it to a trust. Issue went to court. Court said, yes, you are right. So they did not like it. The government, the lawmaker did not like it. That's why he inserted this provision. Now, any individual transfers any asset to any person, that is spouse or, not this guy, sorry, my bad. It's given here only, no, spouse. Here you write spouse or son's wife. My bad. Spouse or son's wife. This for any person, please write down trust slash AOP slash BOI. My bad. Here you write down spouse or son's wife. Here any person within bracket trust slash AOP BOI. Son's wife, same point is covered here. Son's wife, same point is covered here. Where if an individual transfers any asset to any person, like for example trust AOP BOI, without or for inadequate consideration, either zero consideration or inadequate, for the benefit of deferred benefit of son's wife, such income from the asset, whatever the trust is investing, whatever income comes, shall be taxable in the hands of the transferor. Very much so. Shall be done so. So direct transfer, indirect transfer is also covered in all these things. So if I transfer to my wife and wife will in turn transfer it to my the daughter-in-law, covered. Or indirect transfers are also covered. Only legal separation between the spouse could avoid clubbing. In case of transfer of property in a very voluntary agreement to live apart, clubbing will apply. So voluntary agreement, they are talking about legal separation. So separation must be legal. Voluntarily, if you say that no, I don't want to, it's a social obligation, I don't want to live with you, different. It should, like they fight, couple fight and the husband runs away, couple when the wife runs away, then they'll live apart for some time. That is not covered here. Clubbing will still apply. The exemption will not apply. Clubbing will apply. But if it's a legal separation, divorce, then yes. One of my friends went through a bad divorce, I remember. So they lived apart for around 1 year till the case was going on, and then the court granted the divorce. So for that 1 year, will clubbing apply? Yes. After 1 year, once the legal separation is done, clubbing will not apply. Where the wife saves money out of the money provided for household expenses, called PIN money, which is called PIN money. Yeah, the amount will not be treated as assets transferred by the husband, and clubbing will not apply. Like I remember, my mom is a homemaker. I will never call anybody housewife. Homemaker. Homemaker's job is the most difficult job because it is 24 hours, 7 days a week, no break, no sick leave, no remuneration, no appreciation, nothing, only depreciation. Right? So my dad used to pay some money to my mom, and my mom used to save up something. I still remember, very sweet of her to do it. On his 60th birthday, when he retired from forest service after serving almost 40 plus years, he joined the service at 18. So 42 years of service to the Indian Forest Service, Karnataka Forest Department. My mom gifted my dad, out of the PIN money that he had given her a nice, what do you say, leather, couch, recliner. So in these movie theaters, PVR and all that, gold class, if you go, that recliner will come, an automatic recliner. So that we got for him. That was purely from the savings that she had made. Now tell me, if the dad keeps on paying some money, is that also clubbing? No, that's what they're trying to tell. Natural love and affection may be good consideration, but not adequate consideration for the purpose of 64(1). So in Indian Contract Act, section 25, they say agreement without consideration is void ab initio. Any agreement without consideration is void ab initio. But there's an exception in section 25 of Indian Contract Act. That is written and registered agreement arising out of natural love and affection between the parties. So one of the examples that was, Rajaluki versus Bhutnath, one case law is there. CA Foundation, I'm doing a recap. So their husband could not take the torture of the wife. Husband said, hey, please shut your mouth, I'll give you some 20,000 rupees per month. So quarreling, constant quarreling. So the husband started giving money to the wife. If it was not written and registered, then agreement is void. Balfour versus Balfour, if you remember. But if it's written and registered, still is it valid or void? Still it is void. Because here written and registered agreement was there, but it was not arising out of love and affection. General rule, agreement without consideration is void. Exception, written and registered agreement arising out of natural love and affection. So when there is social obligation, Balfour versus Balfour, no contract. Even if there is a written and registered agreement, if there is no natural love and affection, then it will be what? Still, it will be void. That is why taking the features of Contract Act in this case law, they are telling that natural love and affection may be good consideration. Because there is an exception under section 25 of Indian Contract Act. It is not adequate consideration for the purposes of 64(1). Correct? Basically, here what happened was one fellow gave the free asset free of cost to the wife. Assessing officer clubbed the income. He said, no, sir. Consideration she has given. What consideration? Every morning she gives me food. She takes care of my family. She takes care of me. She takes care of my children. So that's adequate consideration. For that I am giving. Court said, hey, cheating. Because love and affection cannot be measured. Unconditional love and all, you'll tell, no, all that, yes. Unconditional love. See, we can be good with, so I mean, we can change our accent, change our English as well. With some classy people generally who meet, we say unconditional love and affection. With normal people, our friends, love, oh, love, we are doing all that thing. Okay, so keep changing, guys. Come on, we should be like chameleons. Keep changing and mingling with people. Even my T-shirt is like one gift wrapper, correct? No, I'm seeing now in the screen. Looks like some gift wrapper, full shining, shining. Obviously, it has to be the gift wrapper because I am the gift. Yes or no? Yes. I know you're clapping there because of this dialogue. I am the present. So obviously, it should be wrapped by a gift wrapper. Yes, sir, color dress and all you come and wear. Fancy dress competition. Are you a teacher or a fancy dress fellow? Everything. Yes. So, natural love and affection will be good consideration, but not adequate consideration. Throat is full gone, guys.